Welcome back to Trading 360. I'm Nicole Petalides, live in New York City. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein's back. He'll take us through the charts, and here to take us through the trades, Jessica Inskip, Director of Product Education at Options Play. Good to see you both. Jessica, how are you feeling about the market today?
Yeah, great to see you, Nicole. So happy to be here. Interesting week in the market. I feel like we've always have this slew of data, but there's also a lot of AI events kicking off. So not only are we going to get some inflation data, we're going to have some AI and developer conferences. So get an insight into that AI story. So a lot of catalysts that could potentially move the market. And I think it's interesting that we're going to get PPI before CPI because the producer perspective tends to lead the consumer perspective, and the producer perspective is doing the best thus far as inflationary measures are concerned. So a lot of potential good catalyst, but a little bit of cautious optimism because of that euphoric state. Some bad could come in, could really send us down.
Right. All right. Well, we got some news from Apple recently on some of the new products, right? And we'll hear more on the Worldwide Developers Conference in June. Some of your thoughts on Apple today?
Yeah, absolutely. So Apple, we've got some thoughts in the works. They've been talking to Google. Perhaps we'll see something else. That event, there is a ChatGPT event today. So it's like they're front running Apple as far as some type of new product that could perhaps compete. Again, speculation there. But I've said this so many times talking to you, Nicole, and we've had these conversations, how Apple did not overhire during COVID. Apple has shown us good management, and we cannot forget that. And on top of the good management, they also have very large cash balances. They have that cash neutral strategy. And now that we see earnings like Meta, where they are now very intensive within their CapEx cycle, that would perhaps lead to revenue within the future, Apple is already well positioned for those type of investments because of the management that's there, in addition to their large cash balances. Multiple wise, they're at the higher end, or about actually the median of their range, around 27.77 is their forward PE ratio. So looking for the next 12 months, their 5-year historical average is about 16 to 34 times. So the median is about 27, so a little higher, but got some higher price targets from the analyst concerns. I think there's some opportunity. I think there's increasing diversity within the services, lots of upgrade cycles, but really it's the AI that I'm waiting on, but as also management that's more important, or equally as important as innovative products.
Right, and it sounds like based on what you said, that they didn't hire too much, things like that, that they're on top of things. Ben, take a look at the chart, please. Welcome back, Ben.
Thanks, Nicole. Yeah, Jessica painted quite the bullish narrative there. That's right. And in many ways, the chart's a pretty good reflection of exactly what she was talking about and exactly what I look for, which is migration of value. It's been to the upside, and we're in a pretty well-defined trend higher across multiple time frames. Let's look at a few of those and just establish first and foremost that if you're looking at the more granular time frame, you're going to see, well, 2, possibly 3 areas of value that have formed off the lows that we saw on Friday afternoon around 182 all the way to begin the week up to 186.43. First and foremost, direct your attention here. You can see a bit of a range that formed. Here's the second, and kind of going out on a limb here, but possibly a third that we're starting to see here. And I went ahead and identified these areas with values in terms of, again, a 1-minute candle chart establishing 182.75, 185, and now possibly a new area of value forming at a higher level. So let's take a step back here, right? Because we don't want to put too much into a 1-minute candle chart. But just looking at this most recent move up here, you can see it's part of a bigger picture move where we're seeing a similar situation play out. Migration of value to the upside. This is a daily candle chart here, and we're going all the way back to when, well, stock was trading around 125, 126. You can see I pulled out the fine-tooth comb here, the microscope and magnifying glass, and identified a few areas, that staircase-type pattern playing out, though, pretty well, as you can see, into the fall of last year, topping out around 200 and balancing now, currently forming a bit of a range around this 184 level. I always say make your way through the middle of the balance area after a failed attempt at the lower extreme, which held at a key area, 165-ish we'll call. Well, ultimately opened up a door for a retest of that upper extreme. So we're talking about the bulls have their sights set on 199, 200. Let's add a little more time on and just want to show you a similar depiction. Bottom left, top right, we can identify areas of consolidation that form. So this is a daily candle chart again, but we've now added quite a bit of time on. I'm going back to when it was trading around 50. So here's the move we just looked at. Here you can see migration of value to the upside, as I mentioned here, Nicole, across multiple time frames. This is a very bullish depiction following a bullish fundamental narrative that Jessica laid out.
Right, understood. Okay, thank you for that. Appreciate it. And to your point, I just was looking at Dan Ives' note from Wedbush talking about ChatGPT today and all these AI events, and that this pretty much could be almost a done deal between Apple and bringing ChatGPT to the iPhone, which he says would be the golden goose for Tim Cook and Apple. So we'll see, and we'll learn more throughout this day. Jessica, thanks for bringing us that top story, without a doubt. Should we move on to Con Ed? Or add anything you like, but Con Ed is up next.
Yeah, absolutely. You know, I listen when Dan Ives talks, so it's a really, really great commentary there. I do have a trade on Apple I'm happy to share with you, just because there is uncertainty, and this is kind of the theme that I have. Uncertainty and volatility go hand in hand, and the way that options are priced, that increases the options premium. So again, I'm focusing on selling options. If you don't already own Apple, right now is an opportunity to add it to your longer term portfolio via a cash secured put, selling the June 28th 185 puts. That was at the money at the time that I gave this trade, but Apple's a little higher, so you may want to adjust your strike up. But that yielded about $440, and the intent of that is now I've reduced my break-even price to about 180. So I'm giving myself a cushion. It allows me to purchase the stock at a discount if it were to move adversely, because you believe in that overall thesis, like Dan pointed out, and like we've been discussing. Absolutely.
All right, next up, and it's been on a good run up lately. 1 year down, but the last month or so looking good on Con Edison.
Yeah, this one actually surfaced on one of my technical scans this morning, which just prompts further investigation with the way that I run my methodology and investment thesis. And diving into more of the fundamentals in the data, they have a new steam rate plan, which is supporting their earnings growth. And this is, Apple was a growth play. This is an income play. They have a really high dividend of about 3.34%. So this is something, again, where I want to sell a relatively close at the money option in order to add this to my longer term portfolio. And again, you know, there's grid pressure. We could point everything back to AI, Nicole, which is amazing that this is the way it's transformed. But we think about the World Wide Web, eventually that occurred as well. So I like to use those parallels when thinking about the investment opportunities.
Yeah. Okay. And that run up, that recent run up is very evident. I can see it behind your head there. Ben Lichtenstein, tell us more about the charts, please.
Yeah, Nicole, your last guest was just talking about the grid, right? And one of his stocks, PICU, is leaning towards some infrastructure spending that was to come there. And this is a good example of what we were just talking about, the two phases of development, focusing on the horizontal phase, migration of value to the upside. This kind of highlights that other phase, the vertical phase. So let's take a look, because we're in a vertical phase here right now, and shares of ED, as we've recently on an hourly candle chart, moved from this kind of overlapping, very random and low conviction phase where you have a well-defined upper and a lower extreme, and you never really break out of it until, well, eventually you do, and you get this breakout. Take a look here. Let's just begin with a 60-minute candle chart here, and you can see how we have gone from a very, again, sideways low conviction phase to a high conviction phase where we broke out through that $92, $93 level and have recently topped out and kind of holding up around $98.50. So no rejection of this upper level as of yet. Bullish pattern playing out here. Now, this stacked up with what we were talking about earlier, the staircase type pattern, migration of value to the upside, and well-defined trend. Well, again, this speaks to a bullish play here also. I did look at this chart here as Jessica was talking a minute ago, and I did notice that, well, you could look at this as one larger area balance, which I identified around the $80 level, but I think you could also just kind of focus on this being another area of consolidation that's formed. Oftentimes, they're very easily identifiable with a break of vertical separation between the two areas of value, but sometimes they're a little bit more overlapping, and you don't really get that really well-defined vertical phase that we're seeing on that more granular 1 hour candle chart that we just looked at. But here again on the daily, a couple different ways of looking at it. This is somewhat interpretive, obviously. This is an art, not a science, but I want to take one more step back, show you where we are relative to the 50-day moving average. This also speaks to some of the strength we've seen as of recent, that big move up we were just talking about, the high conviction move up and through $95. And look at this, right up to a couple key areas to watch here into this $100 level. You can see on the left side of the screen the highs that we saw around this time last year. So above the 50, above the 200. Also RSI here, very supportive of this run up. Again, reflection of another bullish narrative that Jessica's laid out.
Yeah, understood. The RSI supporting that thesis. Jessica?
Yeah, I completely agree. I love seeing it where it's overbought, hangs on that higher end of the deviation, therefore validates the thesis. And again, this is something where it's a neutral to bullish strategy, selling the June 21st 97.5 puts. That's relatively close to the money, which means the stock price and the strike price are about the same. And it gives me about $180, which reduces my overall cost. And it's a way to add securities to your longer term portfolio, especially if this is a longer term hold dividend play, if you will.
All right, next up, a family favorite, right? For all the families that did well with this one, 215% higher over 1 year. Of course, it's off the highs, but still back above 900, and that is Nvidia, which dropped below 800 not that long ago, has been running back up. Some of your thoughts on Nvidia? People want to hear more about this one for sure.
Absolutely. Now, this one is I would say more about the volatility structure that has arisen from the options market rather than the underlying security. But the underlying security certainly plays into it. So I'm calling this not an earnings play. It's circumvented around earnings play, but it's a volatility play. So volatility increases options premiums because there is uncertainty. And uncertainty means either direction. We have a high conviction that it's going to move a lot, and that happens during earnings. So I expect something called a volatility crush to occur. And when this happens, I look for a favorable risk versus reward trade. And Nvidia had a very much higher than normal one. And that's because it is a family favorite, like you said, Nicole. So the way that I'm structuring this one is I want to capture the volatility, and post earnings, I expect the premiums just to deflate purely because the uncertainty is removed from the market. Just that's all it is. So it is a leaning towards the bullish side because we hear from Meta's earnings that they're spending, if people are spending within this CapEx cycle, and there's a huge AI CapEx cycle, Nvidia is going to be a primary beneficiary of that, regardless of who's using what software and cloud. That all comes back to a main source, which is, of course, Nvidia. So I still have absolutely a bullish bias, but the way I'm structuring this one is a bull put spread. This is because it's capital intensive to trade this security for our everyday trader. So selling the June 28th 905 puts, buying the 850, that reduces my risk exposure as if it were to move adversely down to 850 rather than if it goes down, God knows so much. And my total premium that I'm receiving is about $2,500, but my risk is about 5,500. So that's what I mean for the risk versus reward. I'm capturing about 50%, whereas normally we look for 30%. So this is favorable in the terms of option structure. I know I was a little long-winded with the explanation, but there are some options explanations that were needed there, Nicole, so forgive me.
No, I mean, look, everybody wants to hear more about it. They appreciate that you're making the effort and making these explanations really understandable. Ben, final thoughts here on Nvidia?
Yeah, simply put, Nicole, trending up across multiple time frames. Again, a bullish pattern playing out here, and a winner for a while, one that's rewarded these bulls over the long haul for quite some time now. Let's just begin first and foremost. I've got a 1 hour candle chart. We're looking at the last few weeks of price activity. You can see it's very well defined to the upside. Stock was trading down around 756, rallying all the way back to 922, and currently hovering around this $900 level. So very limited in terms of any indication of a rejection of this most recent rally back up and through 900. We're sustaining this upper level. You can see that by just this consolidation that's playing out here. Stepping away from the 1 hour candle chart, adding a little time on, shows a similar pattern, right? Bottom left, top right, balance, which is, well, forming around the $900 level. Not much has changed since last time we talked about this stock. The one thing that we did see was a bit of a dip down in April. So I think if you were to do the math right now, the balance, I think you have to actually bring this down a little bit more into like the 875 range. I think it's what, $200 worth of range here. So 230. So you figure 100 and some odd. Yeah, about we'll call it 830, 840, right in the middle of that range. But just wanted to point out migration of value to the upside, consolidation happening at this upper level. No rejection as of yet. Well-defined lower and a very well-defined upper extreme here. We'll call it 975 to 740, and that's where we're balancing right now. Let's take a step back further and just sort of point to the fact that, again, we're in a well-defined trend up off those lows we saw from last summer around 392 and well off the lower extreme, and the balance that we formed down around this 900 level. And that lower extreme here, I think, is key because what did it do? It held right at that big area around 785 where you didn't want to see price spend a lot of time below that middle of the last area balance that formed prior to the one that we're currently forming. So yeah, I'd have to say, again, across multiple time frames, another bottom left, top right, bullish pattern playing out here, balancing around, well, we'll call it 900. What's 20, 30, 40, 50 bucks amongst friends and amongst a rally that we've seen here in NVIDIA like this?
Yeah, great to see you, Ben. Thank you so much for all these great charts. Ben Lichtenstein on the charts, Jessica Inskip at Options Play. Thank you both very much for the big three today. Appreciate it.